All right, let's jump right into this explainer. Today, we're diving deep into Fortinet, ticker symbol FTNT. Now, if you've been around the tech block a few times, you probably remember them as that classic 2000s-era firewall vendor out of Sunnyvale, California. But listen, if that's still how you're picturing them today, you are missing out on a massive evolution. Fortinet has completely transformed itself into this fully integrated, heavily AI-powered cybersecurity platform. They're driving what they call the convergence of networking and security. And as we're about to see, they are making some absolute waves in the market right now.
I mean, just look at this number, 93.31%. That is Fortinet's year-to-date stock growth as of late August 2026. The stock has practically doubled in value in just a single year, which has pushed its market cap to a staggering $112.63 billion. If you zoom out to a 12-month period, their total return stands at over 97%. These aren't just a few good quarters. We are talking about truly market-dominating numbers.
But of course, this brings up the core question, the real tension we need to unpack today. What on earth is actually driving this massive surge? Is it just pure, unstoppable momentum? Or is there a pretty harsh reality check waiting for them just over the horizon? In this explainer, we're going to break down the euphoric highs of their recent performance, and then we're going to weigh them directly against some very real, very hidden risks.
Okay, Section 1, the bull run and their crushing Q2 financials.
When you look at the sheer scale of their revenue beat, it's pretty wild. Fortinet posted $2.05 billion in Q2 revenue. That's a 25.6% jump year over year, which just completely demolished Wall Street's estimate of $1.89 billion. But the really vital piece of data here is their product revenue. That surged an incredible 51.9%. Why? Well, customers are scrambling to upgrade to higher-performing models so they can secure their new AI workloads. This huge demand for AI infrastructure security basically means Fortinet can command much higher average selling prices.
And this perfectly illustrates how all that top-line growth is flowing straight to the bottom line. Free cash flow jumped an astonishing 239.9% to $965.6 million. To put that in perspective, that represents a free cash flow margin of over 47%. The company also hit a record Q2 operating margin of 38%. So the big takeaway here is that they aren't just selling more stuff, they're actually operating significantly leaner. Fortinet is using incredibly disciplined cost management, and they're even leveraging their own internal AI initiatives to create massive operational efficiencies.
And because of these explosive Q2 results, Fortinet was essentially backed into a corner, in a good way, and forced to raise their full-year guidance across the board. They've set an incredibly high bar for the rest of 2026. They're now projecting revenue to hit up to $8.18 billion, total billings up to $9.55 billion, and non-GAAP EPS up to $3.47. They're basically signaling to the market, hey, this momentum isn't a fluke. This is our new baseline.
Moving right along to Section 2, securing the AI future.
So we've seen the raw financial data, right? But the technological why behind this insane growth really boils down to a couple of key things. First, let's talk about the SASE convergence. Fortinet is pioneering this unified market that basically merges traditional firewalls, SD-WAN, and SASE technologies all into one single platform. And the adoption rate? Staggering. Within their large enterprise installed base, FortiSASE adoption rocketed to 90%, with billings growing over 100% year over year. It turns out, large enterprises absolutely love the idea of an all-in-one security umbrella, and Fortinet is handing it to them on a silver platter.
But their biggest strategic bet, the real game changer, came on August 17, 2026, when they announced they were acquiring Virtue AI. Guys, this is massive. Virtue AI is a huge innovator in AI runtime protection and automated AI validation. You see, a company's attack surface used to just be, networks and endpoints. But today, the attack surface is AI prompts, AI models, autonomous agents, API calls, the whole shebang. Fortinet looked at the landscape and realized they needed to start securing AI itself.
Let's actually break down how Virtue AI's Guardian Agent technology works, because it's pretty fascinating. It's essentially a three-step process. Step 1 is agentic system red teaming. It literally plays the bad guy, actively testing your autonomous AI agents for exploitable weaknesses across more than 50 sandboxed environments. Step 2 is protection and governance. It gives you full visibility to discover if your employees are using any unsanctioned rogue AI tools, and it blocks malicious commands. And finally, Step 3 is continuous AI validation. Every single time an AI model updates, Guardian Agent sniffs out new risks and generates audit-ready evidence for your compliance teams. It is essentially a complete shield for the modern AI era.
And the crazy thing is, Virtue AI isn't even their only big move. Fortinet is innovating organically at just a breakneck pace. They recently launched the FortiGate 1200G series specifically to handle customers' heavy AI infrastructure needs. They announced this major strategic collaboration with Intel to develop the new security processor 6 chip. Oh, and they're a founding member of NVIDIA's Open Secure AI Alliance. Plus, they're partnering with OpenAI on Project Daybreak. They are aggressively cementing their status at the absolute, undisputed center of the AI security revolution.
Which brings us to Section 3, the FortiBleed Reality Check.
Okay, let's just take a quick collective breath here. Up to this exact moment, the story has been pure, unadulterated euphoria and financial dominance. But in June 2026, the entire cybersecurity world was rocked by a massive incident known as FortiBleed. Open source reporting showed that credentials for an estimated 75,000 Fortinet firewalls were cracked and handed right over to threat actors. This was absolutely not a minor hiccup. This was a widespread, highly coordinated malicious campaign.
And here's the truly terrifying part of this entire breach. It wasn't a software bug. There was literally no software patch that Fortinet could just push out to magically fix this. The entire incident centered around the exposure and resale of valid administrative and VPN credentials. The threat actors essentially just bought the keys to the front door. This campaign hit Fortune 500 companies and government agencies across 194 countries. It got so bad, it prompted urgent advisories from CISA in the US, the Canadian Center for Cybersecurity, and several others. It's just a really stark reminder that even the absolute leaders in cybersecurity are prime targets. Finally, let's dive into Section 4, Valuation and the Final Verdict.
Right now, Fortinet trades at a sky-high 54 times earnings. So what does this all mean for investors? It signals that perfection is pretty much already priced in. At 54 times earnings, the stock is trading at a massive premium to the broader market. That leaves absolutely zero room for any operational missteps or missed earnings targets going forward.
And you can actually see this exact tension perfectly reflected in Wall Street's consensus. Out of 44 analysts polled by S&P Global, the overwhelming majority, we're talking 29 of them, have a hold rating on the stock. Sure, you've got 10 sitting at strong buy and a few hanging out on the sell side, but that massive, undeniable chunk of holds really tells the story. Analysts are caught right in the middle between Fortinet's stellar, undeniable performance and its incredibly steep price tag.
Even when we look at the recent actions from the true heavy hitters, the caution is crystal clear. The average price target right now is $160.86, which only implies a really modest 4.79% upside from current levels. I mean, Citi reiterated a hold, even with a lofty $185 target. Baird maintained a hold with a $165 target. Mizuho maintained accelerating, raising their target just slightly to $138. The analysts absolutely recognize the incredible growth, but they are clearly sweating the idea of recommending a buy at these ultra-premium levels.
So, as we wrap this whole thing up, we really have to weigh the phenomenal execution against the very real risks. On the bull side of the ring, Fortinet is firing on all cylinders. Q2 revenue and billings completely crushed expectations. Product revenue is exploding, and their strategic moves, especially that Virtue AI acquisition, put them right at the forefront of the next big cybersecurity wave. But over on the bear side, you've got a seriously stretched 54x valuation, the looming operational shadow of that FortiBleed incident, and a stock price that's already starting to see some expected profit-taking after nearly doubling this year.
Which leaves us with one final, incredibly provocative question. Is Fortinet currently priced for absolute perfection, with all of its good news already baked into the stock? Or are we simply witnessing the very beginning of an unprecedented AI security boom that's going to make today's sky-high valuations look cheap in hindsight? I encourage you to take the insights from the slides we covered today, dig into the research yourself, and, as always, definitely consult a financial advisor. Thanks for hanging out with me for this explainer, and keep learning.